Hi folks, welcome back. We're looking at the Euro Yen 15-minute chart. I just want to go through a couple of trading tips. So we're going to be looking at fibs and trend lines, and one of the questions that are posed in my live trading room is if we're going to get a fib retrace, at what time will it get there? You know, it's not any mystical crystal ball type thing, but basically the way that I apply fibs, basically fibs from the high of the day down to the low of the day, just to keep some consistency. And one of the things that we've commented on recently is we're starting to see a little bit of uniformity back with a directional bias in the overnight trading range. So basically the directional bias is based on trend lines. I don't often use trend lines, as most people who know me will know, but if price is going to come back up to the 50% fib, which is my area of interest for fib retracements, or my first area of interest, at what time will price potentially move back up to the 50% fib? Well, where the trend line and the fib level converge on each other or dissect each other is really where price is going to potentially move up to and turn from. Now, the fact that price hasn't got there yet, because as you can see where the cursor is, price is, it's already gone past that timing, so that's really the area where I would have expected, and that from a timing point of view, would have expected price to move up to that 50% fib level. So the next point of call will be the 38%. Now, I won't typically trade off the 38% fib, but from a timing point of view, that's where price could get to the 38% fib. And from a timing point of view, we've got about 8 to 10 bars left on this 15-minute chart before price gets to that the 38% fib before potentially selling off. Now, I do suspect most likely price will continue to be consolidated between the 38 and the low of the day, which is quite typical of the start of the Asian session. But from a timing point of view, it's going to get there. It's going to get there at that timing point of view. Just take a look at Euro and Swissy as well from the same perspective. Fibs from the high of the day down to the low of the day. Directional bias for the day was given to us overnight, or during the overnight session. It already started trending, as you can see, during the overnight session. So once again, from a timing point of view, if price is going to get up to that 50% fib from a trade point of view, that's what I'm interested in first of all. It's already gone past the time when it could get there. So the next point of call is going to be the 38% where the trend line crosses. And again, we've got about 8 to 10 bars before price can potentially get back up to that level. And again, I do suspect that price is going to continue to be range bound. It's already put in a swing high, swing low. Let's just clean the chart up. It's already put in swing high, swing low. Price is making low highs, higher lows within the previous swing high and the previous swing low. And no surprises here, but it's in the bottom third of the current day's high low range. So again, I do suspect that this is going to be the range bound location for the rest of the day and going into the overnight trading range. The only thing to consider for today is that in a couple of hours time on the chart's 4 o'clock UK hours, 7:15 UK hours is FOMC announcements. So that could just change things slightly, but generally speaking, on a normal day, this is when price will start to go into a consolidation mode. And finally, dollar Swiss, again, same philosophy. Fibs from the low of the day to the high of the day. A directional bias based on the trend line. We've got that from the overnight session. Price was already trending. And again, the area of interest that I'm interested in is the 50. It's already gone past that zone. It's already gone past the timing points from the 38%. So again, I do suspect that price can potentially consolidate. There is FOMC announcement later on in the day, which could just bolster the current trending move that we see just a little bit high before we start to see that overnight range. But in a typical day, this will be where the overnight trading range starts, between the previous swing high and the previous swing low, and ideally it's in the top third, in this case for the dollar Swiss, in the top third of the current day's high low range, and tomorrow that's obviously going to be the previous day's high low range. So it's in a good location, the potential range bound location. It's still just a potential range bound location, because tomorrow morning that picture could change, and later on in the evening with the FOMC that could ultimately change. What I'm looking for the day or on the FOMC announcement is I'd like to see some profit potential come back. So ideally I would like to see prices retrace before the FOMC meeting announcements. to give me back some profit potential. An average day's move has been done, so if an average day's move is being done, typically I don't have a high expectation of any further price movement. It doesn't mean it can't move or it won't move, it just means my expectation is really low. So what I'd like to see is price to retrace before actually committing to anything else on some of the, or to be fair, most of the dollar related cross rates. That's it, folks. That's timing. You know, if you're looking for price to retrace and you want to try and think about where or when that could actually get there, just look for some convergence of the indicators, trend lines and fibs in this case, and you know, simply just look for where they cross. You know, you'd be looking from a timing point of view of, you know, where the 50 or the 38% dissects the trend line, or the trend line dissects those fibs, and from a timing point of view it can be quite a good and interesting location, and also gives you a time reference to think about when it could actually get there as well. That's the trading tip for today, and hope you have a good trading session.